Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report. I am Frank Ochoa, aka PivotBoss, with analysis for January 13th, 2016. Here's a look at the daily time frame of the ES. So far, what we've seen over the last few days here, ever since we put in that bottom, just shy of the 1890s here, we've seen a higher high above the previous high and a higher low above the previous low. And so far in pre-market trading heading into RTH, we're seeing the same, a higher high, a higher low thus far. That's a short-term uptrend, and it's kind of the bounce you would expect after a significant decline like this. You'll typically see some sort of bounce. Now again, given the overriding downtrend, all bounces should be considered a higher time frame selling opportunity here. So if price pops into a key level that you like, that could be an area there where bears will look to defend for a shot at seeing another wave of weakness ahead. I would say a bounce as high as the 1981 halves could provide an area for bears to defend. So we could be seeing more chop into 1981 halves, or at some point between now and 1981s, we'll see some sort of top here or topping pattern that could ignite the next wave of weakness ahead. But again, anytime you see a big move like this, the expectation is for a bounce and perhaps a range to develop. And we've already seen a high here and a prior low at around that 67.5. So that's an important area there, 67.5 down into about 1890. So that's the zone where we could see some sort of range develop below that previous support, which would indicate further overall weakness ahead even from there. So we'll see how this one plays out. Now, if we look at the intraday time frame just briefly, you can see 1932 half is the key level to watch in overnight trading heading into pre-market and RTH here. That 1932 half was the previous session's open price, and it has served as support thus far. Any failure to hold that 32 half would suggest a move back into the bottom of 5-day value at 1908. All right, now taking a look here at crude oil. Crude oil continues to decline here within the overriding downtrending market. As we recall, the rejection here at that previous week's high, the first trading session of the year, indicated that we were likely going to see a move across the range and perhaps a downside break into these targets. So from the very first of the year, we've had this one pegged, which is usually the case for crude oil, where our analysis is top notch for crude oil every single time here. And what we're seeing right now is the previous week's low price at 32.10 holding as resistance. We see an inside day developing here just as we head into RTH trading right now. What we got to see is how this thing plays out 32.10 here, because if that area continues to hold as resistance, expect a final push into that 28.91. We don't come all the way from the edge here to get just this close and not reach the 100% target. The algos, the institutions, everyone's gunning for that target based on that prior key range there, and it's just what markets do. So the expectation is for bears to continue to defend as high as 32.10 for a continuation downward into that 28.91. Any push above 32.10 and a hold would suggest a return back to value, which would be 36.88. All right, if we drop into the lower time frame for a brief moment, you'll see the 32.10 here. That's our key level. We have key levels marked all the way up from 34.30, 36.20, and 38.30. Those are all price-based key levels there that the market has been responding to. And right now, 32.10 is that next key level, right? That's the one we offered that previous session where we said if price bounces into 32.10, that could be an area to defend for the next wave of weakness, and that's what happened off that level. Now we're slowly creeping up toward that zone. I would say 32.10 continues to be an area where bears would look to defend, either trap above or reject below for a shot at returning prices back to 30 and perhaps below. Any push beyond this zone opens up a 5-day test, a test of 5-day value at 33.10. Now taking a look at gold here. Here's the gold market. We talked about before how 1088s were very important, and bears would want to look to defend, or bulls would want to look to defend, and bears would want to slam. And right now, bears are winning that move. We saw the break from the 3-day narrow range. I talked about that 3-day narrow range could spark either a move to the upside targets remaining, or would lead to a push back to 1072s. And right now the bears have it, with a likely push into 1072, especially if 1077.90 doesn't hold. Now, I did mention before, given the rounded nature of this pattern, any pullback is still likely to be seen as a buying opportunity, perhaps as low as 1072's value, as bulls look to defend after taking value bid in the week before. That would lead to the next saucer type move higher, which would put us into 1130 and 1147 territory. All right, let's drop down into the intraday time frame briefly for gold. One thing here to watch out for is the key levels. 1083 was just violated after 1092 when offered. So we had this key level holding as support. It gave way, dropped down into this key level, and then bounced back to the previous key level here and was defended by bears, which sparked a push down below the 1083 key level. When price comes back to 1083s, bears are looking to keep prices offered at 1083 for a shot at further downside price discovery. Now the thing is, that doesn't mean they're winning the battle right now. Bears are defending, but if price pops above 1083 and holds, all of these bears that got short here will then become trapped, and you're likely going to see a squeeze back to value at 1102.90. So the key level to watch here is going to be 1083 as we move forward in gold. Looking at the NQ now, what you see here is nice bounce after reaching the 100% monthly expansion target. We were watching these targets from the get-go, and there it is, 100%, 42.09. Look at that bounce. Also hit our 42.26, which was the key level. So there was a confluence of key levels at that zone where programs can take money off the board after this expansion, and that's basically short covering and profit taking. And now any bears that got in short here are then become trapped, and now you're seeing a short squeeze based off that price action as well. I mentioned before, if prices can get above that previous high, 43.06, and hold it, that could offer an opportunity to see a move back to 4,400 and perhaps as high as 44.49. But the violation of this 44.49 here, any retest into that zone, I would believe a pullback as high as that would still constitute as an area for bears to defend for a shot at keeping prices below this key range, which would then lead price to at least retest the recent lows, if not exceed those lows to the next lowest shelf. So something to watch here as we move forward. But keep in mind, this recent high here to this recent low could become a trading range. Anytime you see this type of big move, the tendency is for the price to bounce and establish a range where two-sided trade can occur. Outside that range will inspire further expansion. All right, taking a look at the intraday time frame for the NQ just briefly. Here we are. Let's drill down a little bit lower in this one. Let's go 2500 volume. Basically, 43.11 half is the key level there. We have 42.26 as a key level as well. And right now, prices are holding and went bid. The previous session's close went bid right off that 43.11s and rallied. That's short-term bullish. We've had day over day higher highs and higher lows. A nice little channel beginning here. We could see a pullback again as low down into the channels, 43s here, or even at the bottom of value. But I would expect bulls to come in and continue to defend for rotations higher as this thing continues to bounce. All right, that's it for now. Let's see how this thing plays out the rest of the session and the week. Good luck.